Good morning, everyone. So do you own a rental property and do you have record that on your personal tax return? If you do, let's talk about the depreciation of your rental property. Way too often do we see new clients come into our office that own rental properties and their prior tax preparer has depreciated that rental property on their personal tax return when they really shouldn't be doing that. And I'll explain. So when you depreciate a property, you get to write off that portion of that home. Okay, it's 4% per year on whatever the remaining balance is. So if you are in the first tax bracket, chances are your write-off is going to be equal to 25% of whatever that depreciation amount comes out to be. And that sounds great. You're saving 25% of the depreciation on that rental property. But what happens 5-10 years from now when you sell that rental property? Well, all of that depreciation gets recaptured in your tax return, and you end up paying tax on that full amount all the way back up to what it originally cost you, and then capital gains happen. Okay, so you're paying tax on the full amount of that depreciation that you've already written off. And remember, we were only getting 25% of that depreciation. And now when you go, your income might be, if your income usually floats around $50,000, your income might be, $80,000, $100,000, $150,000, depending on how much that property originally cost you. So what you're going to be doing is paying taxes at 30.5%, 36%, these are Alberta rates, obviously, on that same amount that you only got to depreciate and write off at 25%. So you're actually going to be paying more taxes in the end by depreciating in a lower tax bracket than you would be saving. So there are instances where we do depreciate rental properties, and the majority of the time it's because they have really high income, talking $300,000 plus, or there's a certain situation in their life that it's advantageous for them to have that depreciation. Okay, and that could be multiple things. I'm not going to go into those things, but yeah. So if you have a rental property, you really need to analyze whether or not you should be depreciating that property, and the majority of the time the answer is going to be no. So I hope that helps. Take care of yourself, take care of your family, take care of your friends, take care of your logbook. Take care.
Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below. We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.